Hey everybody, it's CryptoBirb, Adrian speaking. Welcome to today's Friday webinar. Today's session is going to be mostly oriented around how the media are used as a weapon against us, how media are used as a mainstream weapon, as a mainstream tool to manipulate the financial markets and the way that we all live. Okay. Of course, I'm going to discuss what's happening across the Bitcoin markets across the legacy markets as well, because there is definitely a lot going on the S&P 500, on the industrial side, on the Nasdaq side. Big companies have been sinking like crazy. So we're going to give it a go. We're going to give it a deeper discussion. If you guys are ready to hear this and a couple more updates, make sure you stay tuned. We are going there right in a second. Welcome. Hope everybody's doing okay. Please let me know very quick how you're doing okay, how you're feeling. Actually streaming it live from Poland. Today's weather has been somewhat good and promising for hopefully soon to unfold springtime, with some better weather, less rain and more sun. This is what all the Polish people probably want, myself included. Hi from Slovenia, from Matej. Beautiful. All the best love for Slovenia. Beautiful countries. Yeah, I do really want to know how you guys are feeling today, where you're writing from. Please let me know that in the comments as we go and dive deeper into the further details of the discussion. Okay, so like I said, let's give it a warm up then. 300 Clifton says, spring, not here in Minneapolis. Pozdros, New York City. Grzegorz. All the best love for you guys out there in New York City. I think Siemanko Mateusz. Hello, Burp from Brazil. Hello, Ellis. Mark, UK, beautiful. Malaga, proszę bardzo, cześć. Hello. I'm feeling not gonna make it. You're going to make it, hopefully. Montenegro, pozdrav. Beautiful, Igor. Switzerland, okay. We have so far pretty packed crew from the European region, so this is overall good. Is this good time to buy silver? I'm gonna do my best to discuss it briefly later on the show. Delaware, US, Romania, beautiful countries. Hello from Pendolino. I think there is tiny bit of a delay in terms of the chat that I see, in my screen. So, well, make sure you stay patient with it. And if there are any questions, of course, make sure as we go over the show, make sure you actually post them right in the chat where you're writing. If you're having some more specific questions, I do suggest head to our YouTube where the mainstream is held. And this is well, probably easier for you to ask those questions there. Hello from Ireland. Hello from Canada. All the best love and fingers crossed for you guys out there in Canada. Now you're going through a lot. Don't give up. Just stay strong. Stormy Belgium, Morocco, Ireland, like I said, South Africa, Philippines, sunny Los Angeles. Tell me one day that Los Angeles, LA is not sunny, right? Pakistan, Costa Rica, whew, Sweden, Russia. Good. Okay, listen, I think we can get it going. So I do really hope my voice and the audio quality are fine. Okay. Well, I'm going to kick it off, guys, with sharing a couple of well, details, hopefully, for how the markets have been having well, so far today. Okay, how they've been behaving. Uh, Starting off with a very quick outlook for what you're seeing in the Dow Jones Industrials, it seems that the overall, tensions and the overall uncertainty, instability in the markets, lack of clear direction is adding to the overall, I should say, selling pressure, right? Selling part of the market as the risk off environment seems to be taking somewhat of a lead, right? You can tell that by, well, by by the bars presented in the bar chart and price chart, if you will, point chart for the industrial average for Dow Jones Industrials. is taking a new low, right? We were hovering somewhere there around the support. The support could as well has got actually breached similarly to what it got, on Bitcoin. We're going to give it a deeper point to discuss later on the show. But so far you can see similar rejection, although this upside pullback, managed to climb up higher when compared, for example, with the composite index, right? So Nasdaq Composites and the overall tech sector, has been taking quite a strong plunge. Today, as you can tell, it's since the very open, it's 1.29% down, or 177 points up the scale, actually nearing and narrowing 13,500 points on the scale, nearing and approaching the previous support area where a lot of congestion was going on, for the bars out there. S&P 500, perhaps this, or we can actually just give it a little bit of deeper look, right? If we give it a check for comparison, for an actual comparison between the composite weekly chart and S&P 500 weekly chart, large cap index, then you're going to see that they look somewhat similar, but not necessarily the same way, right? You can tell that there has been, of course, like a heavy plunge, on the overall increasing FUD and the rate hikes, like, promises from the federals. Then you saw an actual upside pullback, into the retest of the 50-week average, which stands almost for an entire year of the historical records of the price changes. So this index actually is so far has rejected, this around this perfect, mean reversion level, okay, of 14,500 level, approximately $1,000 lower, thousand points lower, right, as of now. And after breaching through local lows, it seems to have overall a lot, more to do on the bearish side in the short-term perspective rather than the bullish side, right? The military tensions between Russia and Ukraine, at least per what the media report. We're going to actually just discuss it a little bit later with the show. At least per what the media reports, this has been one of the main anchors and plays for the sentiment flips and changes for the markets over the course of the past couple of days, right? So, like I said, support's broken, new weekly low, heading quite a nasty, upside week, candle shadow to the upside, showing this selling pressure somewhat during the week, arising as we were heading lower. If you have a look, of course, at the support resistance areas for both of these, right, you can come up with the conclusion that, the previous support area was actually, defined by this somewhat of a weak, weakish region where you had a lot of weeks, be it here or even stretching a little bit higher, right? You can tell that there has been somewhat of a confluential level, like a lot of conjunction for the buying pressure coming in terms of the bounces, right? So you saw with a rejection, gap down, heavy decline, upside week appeared, on the bottom side, right? Another week up here, some gap up, and stronger upwards sequence actually just developed, right? So the way I see it, we are not far from the technical support, right? But whether this technical support is going to get tagged, to my mind, as of now, in the short-term perspective, depends how the media are going to portray what's happening over the global conflicts. Having a look at an S&P 500, like I said, we are having actually the comparison between, like, just take the MACDs, right? The MACDs actually, in both cases, are, growing in the momentum. You can tell that the bearish pressure somewhat accelerates, somewhat increases over the time, because the shorter term and the longer term average, the composites of the MACD, moving average convergence divergence indicator, actually just they are detaching, they are running, away from each other. As in, this is a typical excuse that this is a typical situation for increasing momentum. That's how we know that the momentum is increasing locally to the downside. Does that mean it's going into the bear market? Well, not necessarily, right? But definitely the bears seem to have regained somewhat of an upper hand as we headed later into the weekly close, uh, heading into the weekly close of the, at least for the legacy markets. Right here, you can tell that the situation over the S&P 500, the large cap index, actually looks somewhat better. We've never tested on the composites, well, this region spreading between the short-term average, which is the shorter term average, 10-20 week average, and instead only got a proper tag and retest at 50-week average, right? On the other case, you can clearly tell there's been somewhat of a breach, of course, then an actual pullback into the 50 and 20-week average, right? And this price action actually got rejected off 20-week average. So we are looking somewhat of a deeper, upwards pullback, somewhat deeper recovery, followed by, well, relatively stronger market, although of course, locally seeing and pointing towards the weakness side, right? Technically, again, 50-week average has been rejected for the composites. We are heading lower. Here, we are somewhere around this 50-week average support of at around 400s, right? We're trading slightly below. We'll see where the actual weekly close gets us. Just for instance, there's been this is the Netflix chart, right? So you haven't really seen after this massive gap down, on the earnings season, if you will, we have not seen somewhat of a full recovery yet. Sooner or later, in my opinion, due to the nature of the volatility in the markets, eventually it's going to get filled, or as Japanese traders, technicians would call it this way, that the window is going to get closed, right? So this definitely raises eventually some chance of a bargain hunting, right? Perhaps this may be a DCB, dead cat bounce, but we're actually yet to see about that, right? So the stocks are clearly on the bearish side throughout the week so far, with the composites taking a bit more hit. Okay, if we have a look at the energy sector per the ETF, you can tell that it's hovering, even taking the large a little bit taking the chart a little bit larger, it is pointing to somewhat of a shorter term average, and consolidating in this form of a, well, horizontal movement, right? It's hard to tell what kind of like a chart pattern there is. It looks a little bit like perhaps some diamond structure, if you will, right? Some some expanding triangle and then symmetrical triangle, but of course there are quite a bit few bars in the chart to perhaps validate this thesis. But one way or another, we are moving in a form of a sideways movement, right? Sideways with tiny bit of fake outs on top and on the bottom, while hovering around this shorter term average. This is a daily chart, right? And we are analyzing the XLE, the energy sector, ETF, basically, right, which depicts how the energy is behaving. And you can tell that ever since, well, the military conflict, over the Russia-Ukraine tensions, have started emerging, you could tell that the price action was definitely upwards oriented, strong increase coming into the energy sector, mainly due to the oil prices going up, right? So WTI crude oil actually definitely hit a strong move to the upside. Having a look perhaps at, well, the bonds, you can tell that the 30-year bond prices actually have slightly, just rebounced here, gave a proper bounce at tiny bit of a moment here. The yields are actually trading high still around this year, multi long-term resistance area. Right now at around 231%, right, down since the open point 128%. This is how it looks. Perhaps more, I'm a bit more of a fan, for 10-year treasuries, for the notes. So having a look at the yield, we are still trading, very high. You can tell definitely there's been a strong influx on the percentage, side for the yields for the 10 years with the maturity of 10 years. And this is usually accompanied by the inverse, or I should say negative correlation for the actual bond prices, right, or the note prices. So, well, whenever the yields go up, the prices tend to go down. This is how it works. For gold, right, ETF of gold, strong gap up, well, and trading still around the similar region, some form of an inside bar, if you will, Harami candle on the candlestick chart. Trading high, and so far, there's been no really sign of a weakness as of now, right? There is like what 0.17% perhaps on the at the ETF part, but gold is actually gaining on the spot, right? If you have a look at the gold chart, the gold is trading at 1902, right? This is definitely one of the levels that hasn't has rarely been seen over the course of the past years, right? What I can say is that for the gold, there's been so far very good looking breakout, right, of this form of a consolidative movement, be it whatever you name it, triangle, or doesn't matter. For the chart patterns, I think many people confuse it, whether would argue for days and hours whether this is a symmetrical triangle, or this is a bullish pennant, or this is a rectangle, or a box, or a saucer, or a cap and handle, or whatever. There are thousands and thousands of patterns, candlestick formations, bar chart patterns, and all of that leads you to still being able to recognize the very basic nature of trends, right? The upsloping trends, downsloping trends, and the horizontal quote unquote trends, which are basically the chart patterns for quite often, right? So very decent breakout on the gold side so far. The only major issue is that the way that it's worked before, every single major decent breakout of it on the gold over the past months, has been faded, right? Every decently looking breakout was faded. We're talking about this one, or even about this one, perhaps, just to start with, right? Fade, fake movement, right? Then another breakout here, boom, crashed, right? Then another high, another trend line found taken, another breakout, faded, boom, right? Invalidation of the trend line. So while I'm extremely bullish, overall for gold, for silver, I would stay a little bit cautious about, about the, gold returning very, very high amounts, very, very good percentage. The way I personally, use and observe gold is mainly as a portfolio diversifier, if you will, right? I use it as a tool to diversify my portfolio, to balance out a little bit of the volatility over the portfolio and the actual wealth taken all together. And gold serves this purpose well, right? Then secondary purpose is the actual returns. So here, the gold for me is more of a hedge rather than investment for this primary focus. But investments wise, this is eventually, in my opinion, still going, 3,000-4,000 when the dark times are coming. In my opinion, we are nowhere near that time yet. Okay, but overall, a very decent move on the gold side, on the gold chart. And finally, if we have a look at what dollar, has been doing throughout the weekend, throughout the day so far, okay? Because on the silver, oh, actually, while we are at the commodities, let me just show you two more charts then, very quick. By the way, I hope you can see me fine, and I hope you can still see, everything that's been going on. Let me know how the quality is fine, if the quality of the voice and the picture is fine. If there is something to improve, please let me know. Hi to everybody who's just joined the stream. And by the way, while we are at it, make sure that if you're watching that on YouTube, make sure actually smash the likes and hit the subscribe button, hit the notification bells on as well, because we release the content pieces, the videos, explanations, breakdowns, technical analysis over our YouTube pretty often, basically every single day, right? give it a little bit of analysis to silver, some of you may know that I'm a huge bull and a huge fan of silver, right? And we've been looking at this monstrous consolidation, that has been going on for, well, if you will, since August or July, August, Q3 2020, right? So quite a long time already. But recently, as you might have, you know, found me, just saying that this red circle area actually confirms the relative strength that silver has got and reclaimed against the S&P 500, right? So this actual strength, well, right now at the ratio of 0.0055 seems to be accelerating to the upside in the favor of silver, right? So gold and silver tend to move in tandem, and it is an additional benefit and sort of like, validation point perhaps that look at it this way, that if the gold moves strongly and silver catches up, well, or the other way around, then, well, it is more of a sign of the overall health, if you will, to the market, for the commodities, for the metals, of course. Right. So this strong upwards trend breakout, this upwards breakout of the prior lasting, downwards trend on the ratio, on the relative strength of silver against S&P 500 as a benchmark, has seen a major upwards breakout, and we are seeing. It seems that we are near the actual follow-through validation and confirmation to it, right? Long-term chart looks super bullish. I do believe we are yet to see the best part. And while at commodities, well, this is one of my favorite chart, my favorite average Bloomberg Commodity Index BCOM futures. Well, this is the monthly chart on the left, and on the right you can have a look at the daily chart, right? We are trading at 111.5 level for the futures, and this is the level that was last seen back in 2014, right? So we are looking at these levels for the commodity strength, and you can tell that there's nothing weak about this going vertical. There's full of like super strong movement, full of momentum that's been going on for the commodities, mainly driven by the by the energy sector, right? By oil, by natural gas as well as another factor. Then also you would have a look at the strong metals, right? Strong metals. So overall, very decent push. Long-term 50-month average is curving up nicely and gaining on the momentum, sloping up decently and strongly, in my opinion. 200-day average and 50-day average actually on the right, are also in favor and in the same direction, favoring the upwards movement. And so far, there's quite a significant pump. All the indications and signs are, and the stars align for the bulls here. So I'm pretty glad, that quite a chunk of my portfolio is positioned in the commodities, and that's where my profits, had been going into over the course of the last year. And finalizing, the market wrap very quickly with what's been going on for the dollar, right? US dollar. This is cash settle end of a day. And here, well, we are moving. It is somewhat of a sideways pattern, right? Then swept at the low, swept at the highs with reversals, outside bars coming up, upside bar coming here, as a bullish engulfing, if you will. Then some form of a doji almost, if you convert it to the candlestick chart, So locally, again, I'm not the biggest fan of analyzing, US dollar strictly technical analysis wise, because this is not actual as a reserve world's reserve currency. This is more impacted by the fundamental nature of the things in macroeconomics, like monetary policy, rate hikes, rate changes, etc., and other conflicts, which ignite, for example, safe haven rallies, right? Be it for the gold or for dollar. So here, on the actual performance, we are up 0.11%, so not too much, but right now trading at 95.80 for its ratio against the basket of the other strongest currencies. Uh, Giving it a little bit of a quick look into what's been going on Bitcoin, right? Just naked chart, price action wise. Uh, let's even turn off the B Pro, the Burbicator Pro for a second, right? You're looking at, well, what kind of like a trend is that? What kind of like a movement is that, right? You can tell that to me, well, we've been going on in some form of a uh, larger sideways, right? Larger sideways. Of course, I'm not talking about some local like fluctuations, because there's definitely been an overall strong upwards breakout, right? And technically the trend is still on the bullish side, even if it tags 38,000s, but definitely the deeper it retests it, the more weakness it shows, and the less bullish power it has, or the more the more at risk the bulls are positioned. So here, of course, it would have been best for Bitcoin to hold the line in the sand, for the support at 41,000s. But well, the truth is that the military tensions that have been reported of the last couple of days, by the mainstream media, have impacted the way that the financial markets move. The equities, as you have just seen, we're showing a lot of intra-week weakness, right? After a strong day up and a gap up, on the markets, then the bad news come in, right? The bad news comes in and the market dumps. Then the good news comes in and the market pumps. Then the good news doesn't appear anymore, right? And there's uncertainty and the market dumps. So this is literally how it's been looking over the course of the past couple of days. And Bitcoin as a risk-on asset, as a form of a risk barometer appetite, for the risk appetite for on the investor side, has been taking a hit along with the equities, right? So I'm not really any much surprised by the behavior of Bitcoin, right? Knowing that the equities are as well tanking. So it's not that the Bitcoin or crypto are just the only crashing ones, right? We're talking about PayPal getting like 70% slash in the price, right? It was trading a couple of months ago at 300 bucks per share. Now it's trading at, I think, around 110 last time I saw it, right? So it's those are, as people comment, those are the real shit coins. So here, if we actually just again trigger perhaps the B Pro as of now, let's trigger the B Pro real quick. Let's put it on. This is a Burbicator Pro, my actual like personal trading tool, trading system, if you will, combination of a couple of indicators. Well, we are looking, guys, at an actual technical invalidation as of now for the short-term upwards trend that was actually brought by the breakout, right? Depending on the exchange, perhaps, but this is this previous prior support at 40,500 approximately, has been breached, okay, with the overall uncertainty increase and the tension, rising, at least media-wise. Bitcoin seems to have broken its local line in the sand, its local key essential support. Does that mean it's going to go like down to zero? Not necessarily, but right now the way I read it is that the bears have regained, as of now, the bears have regained the upper hand, right? So the bears are who dictate the overall plays and rules, if you will, right? The clean invalidation level for the bears when they lose control all over again seems to be positioned at least automatically by the Burbicator Pro at the current time frame trailer stop level at 44340. Okay, so well, we are locally, right? Well, of course, trend line wise, like I said, we are still on the bullish side. So it's better to have than not, of course. But eventually, I definitely do not want to see or do not like seeing, at least for like, for the bulls out there, now, for Bitcoin to have broken through its significant support of 40,500, right? And ever since then, we have initiated and triggered a new short-term, at least short-term trend. Not even a trend, but like I said, the table kind of like, the table's seats switched, right? The bears have regained their control, and now they are who dictate of that play. Um, and yeah, so this seems to be like a very fresh case, a very fresh case, and my bet is that it's supposed to be invalidated with the breach through 44,340, right? uh well, that seems to be the main point, right? Other than that, we're moving, of course, in this local sideways um, defined by well, by the extremes, right? By the extremes. I'm saying it's a sideways because, well, you eventually got sideways here, the dump here, then the pump. We are basically at the same levels where we were from before this overall deviation down to $33,000. This is why I'm saying it's some form of a range movement with a fake out perhaps in the bottom, if you will. Some of you perhaps may be spotting some form of a, inverse head and shoulders pattern, perhaps, if you will, right? But I'd not be necessarily overly eager, to call it confirmed or to call it complete, as long as you don't see an actual breakout or retest that holds through its neckline, right? This then potentially could take us into the $50,000-$60,000 region, but until then, we have to regain the balance at 44,340, right? This seems to be the main support level, the main resistance level that needs to be flipped and reclaimed as of now. Price action wise, if we turn it off, right? So this seems to be like defined by the overall momentum as of now in the market. This is what the momentum reads show you. PA wise, price action wise, you can tell that there has been, well, we have not per se lost, or have we? Well, with early indications, the trend line, the trend line has broken down, right? The trend line has been broken down with this breakout of the yesterday's session. So there's an early indication of this upwards trend somewhat getting invalidated, right? Local trends, of course, are down. So far it's tagging its prior support, right? Its prior, its X resistance region that now, based on the polarity change principle, seems to be, acting as a form of a support. So potentially Bitcoin may see somewhat of an upwards price movement at around $39,000, $38,000. This is the potential support region. And if this one helps, if this one helps Bitcoin bulls to maintain trading around there, this seems to be a favorable case potentially for further upwards increase. But then, of course, 44,000 needs to be reclaimed sooner than later. Other than this, if we break through this support region at $38,000-$39,000, in my opinion, we may get another punt into the low 30,000s, right? God knows what's going to happen with all these media tensions, because they are not necessarily even showing you guys, I think the real case, right? Because this episode is titled, they want your crypto, and I do believe there's a lot of pressure from the external factors, from the outside of the market, both on for the equities and for the cryptos, right? That seem to be played, and it seems to be played well. So here's what I actually wrote yesterday, right? If you watch closely, you'll have the chance to observe an empirical proof of how media are used to manipulate the markets, right? And this, in case this hasn't been obvious to you, the media are the tools to create opinions. The media are The mainstream media are there not necessarily to educate you, okay, to educate the viewers, watchers, listeners about all the variety of options, but rather to dictate one streamline of thought, right? So one specific narrative seems to be favored by some media stations. So here, of course, this is just another account about more, spreading the information, of course, used on Twitter. But this is what you've been seeing, in the markets over the course of the past days, right? Russia responds to U.S. conspiracy theories and questionable chemical attack video already emerges. Russia's Interfax news agency reports no one was hurt in explosion. Separatist authorities in East Ukraine says a car was blown up near government building in Don TSK, right? Some pictures of fire, pretty much put at with the caption of explosion. So we have 4 updates, and there's so much fear induced already with these narratives, with these tweets, that well, just like the chart suggests, perhaps in case you see it, that there's quite a decent pump, on the shorter term movements every single time that the Russia seems to be mentioned in the headlines. So how the media manipulate the markets? Well, first of all, every media station, it has its own owner, because this is a legally operating company with a certain mission, vision, and etc. So they have their owners, they have their connections, they have their information donors. So it is natural that before we, as the media readers, users, get to know some piece of an information, this piece of an information is prior to the release, is prior and before that analyzed, wrapped in a text, captioned properly, headlined. So this is an information asymmetry. There are people who at every second know more than we do, right? And because those media seem to be the only window out, the only way out there to see what's going on the other side of a planet, right? Those media create certain picture which may or may not be real or true. For example, I live in Poland, which is neighbors, to Ukraine, right? And because I live in Poland, I have no freaking idea how it is actually looking out there in Ukraine, right? I have heard as many bad voices out there publicly in Twitter as many chilled voices, somewhere around my contacts. So the way I approach that, I'm always very, very cautious about, hearing and reading what media stations say. There you go. Put in orders, minister to organize shelter for residents. Put in orders, emergencies, minister to go to Rostov region for border with Ukraine, right? Just an idea, another one, right? Walter Bloomberg. German Foreign Minister Baerbock, sorry if I mispronounced it, says U.S. sanctions should not hit Germany harder than Russia. So it's Russia, U.S., Biden, Russia, Ukraine. That's all day long. All day long. All day long you get military conflict thesis popped, right? Stocks extend falling. Separatists in self-proclaimed Donetsk Republic, in East Ukraine says that the plan to evacuation, fire, all the fear-inducing cases, right? The Joe Rogan Experience podcast, no letting on Spotify. Come on. Ukraine Foreign Ministry says calls for response from international community, says lack of proper reaction or neutral position will only fuel Russia's escalating situation, etc. Fires, death, tanks, wars, uh, all these fake statements and captions are hitting 24/7, right? So let's say you want to get something cheap. You want to get an asset cheap, right? You want to get some valuable asset cheap that people do not necessarily want to sell it to you, or they want to sell it at a high price, right? And I'm not necessarily talking about Bitcoin. I'm talking about anything out there. So what you can do to make them sell it to you is you can build a narrative that A, they do not need that anymore, so they can sell it, or B, you induce enough of fear for there to dump their bags, to sell it to you at any cost, to sell it to you at any price, because it's not rational. So, in order to sell or to gain, to buy something cheap, something that is very scarce, and something that is very expensive, because there is not much of it, then you usually use the fear weapon, right? The other way around, when you want to uh, build a liquidity for your exit, let's say investment banks or even Pfizer, you remember perhaps I think it was last year that I think Pfizer CEO actually came up public with a public note about the Pfizer's vax coming up, for COVID. And the same day that he dumped 60% of his shares, the same day of a pump, that there was a pump in the market for the COVID, vaccine coming from Pfizer. The same day that the media picked up the topic, he dumped 60% of his shares, right? So the media seem to be more often than not used as a tool, as a weapon by the governors, by the people who are, just ruling them over, in order to build certain narrative and induce either greed or fear. And this, ladies and gentlemen, has been the eternal tool, the eternal way to manipulate the markets, right? By the fear and by the greed. This is what's been driving the entire market thesis. And honestly speaking, I have no idea what is happening, like I said, on Ukraine, right? We are neighbors in Poland. For me, it's quite peaceful as of now. I've talked to some Ukrainian people. They, as far as they told, it was pretty peaceful on their end too, right? I have never seen Russian, just tanks or like armies just stepping in there, because I don't live in there. So naturally, you know the only way out, the only window out for me to see, is to read or to watch what they post, right? But then if I actually just have a look at only one stream of media, then I undergo uh, some form of a brainwash, because I take in only one narrative instead of collecting a series of those, right? So the way I see it, because it seems to be obvious that if you put in CNBC, Russia, Ukraine, I've seen each and every single large media corporation switching the narratives every single 5 minutes. Okay, like yesterday, 2 days ago, literally, it was 5 minute distance between one piece of information saying the Russian army is nearing the border of at the Ukraine, and the 5 minute after, following up, there was a news that uh, that some pilots, some pilots were observing the Russian army just being withdrawn, right? So, and it's just one time after another. There's so much misinformation, so much purpose misinformation, that nobody knows what's going on. Because nobody knows what's going on, this is how you induce fear, the chaos, right? The misinformation. This is the tool to induce fear. So, in the markets, especially the risk on markets, as in the equities, the cryptos, the risky assets, they too take a punt, to the downside because of that. All right. Of course, guys, all that I'm sharing here, those are my personal opinions, of course, right? It's very hard to tell what is going to happen, the next 5 minutes or an hour, or even a day in the markets, because the media keep changing the narrative every 5 minutes, and it's not even depending on what we do as traders that matters in the market, but what the media dictates, because the bots and algorithms who trade mostly in the markets are there with an immediate reaction. Okay, the moment that the media news information is put out to the public, the bot picks it up and sells or buys accordingly. So they are immediate, as opposed to us traders who are discretionary traders, more often than not, right? So I have no idea what the media is going to tell you in the next 5 minutes. I'm not really exposing myself to unnecessary risks. I'm still, of course, in my long-term positions. I'm not adding any altcoins as of now. I'm just simply waiting. I'm simply waiting because every 5 minutes the narrative changes, and it seems to be, a bit pointless to try to force it, to try to force this extremely uncertain situation, right? So, Igor said, if you don't read the news, you are uninformed. If you read them, you are misinformed. Mark Twain. Uh, Assuming Mark Twain really said that, right? Because I never saw him. I never saw him saying that. Assuming he said that, this is an actual case. So, ladies and gentlemen, this was supposed to be more of a shorter term, chart review, the perhaps to some of you an eye-opening session for how the media are used as a tool, as a weapon to manipulate the markets via inducing the fear and misinformation and chaos. I have no idea what's going on at the Ukrainian border. To be honest, I've never been there. Like over the course of the past days, weeks, since this overall tension started. You only know as much as that media tells you. So my suggestion is, of course, to keep your eyes open to many sources and to read many sources rather than focus just on the one, especially if it somehow validates your own opinion. All that said, guys, all that said, because I need to be running, one of the main conclusions is that uncertainty, fear, and chaos as misinformation are induced into the market right now, are being induced, okay, by the media, by the news, by the information pieces coming out, and they do change every 5 minutes. It's impossible to catch up with every single update. There is some, to the best of my knowledge, later on in a couple of hours, there's President Joe Biden, I think, addressing publicly some points about Russia, if I'm not mistaken. So I'm pretty sure, and maybe as long as you can be sure of anything really in the markets, that is also going to be reflected in the chart somehow, depending on what Joe Biden says. So this is how it is. This is what it is. It is what it is, right? It's a little bit crazy. Before I go, I want you guys to consider getting the free sign up for the Burb Nest, where I would actually just keep everybody posted for the next hours, days. We've been doing that for the 5 years already. This is the 5th year of the existence of the Burb Nest, amazing, beautiful educational platform for investors, traders. We discuss the markets every day, every minute, 24/7, 365. And I'm going to get you guys 7 days free trial. If you want to go in, just make sure you actually put in your email address, your first name, check your mailbox, agree to the terms of use. After reading it, of course, and you're going to get it, your free trial, 7 days free with educational trading materials, any markets, crypto, legacy markets, forex, commodities, indices, 24/7 team support. We're expanding the team, so there's a lot going on as of now, guys. Daily webinars, calls. I hope you enjoyed that. Make sure actually give it a go. Try yourself. Try your luck. 7 days. It doesn't cost you anything at all. 7 days free. Go to theburbness.com and the upper right corner. It's a sign up free anywhere. You actually just have a look at the website, theburbness.com. Go for it, guys. And I see you. And I see you in the nest. Stay safe out there. Do not overtrade. God bless you all. Bye bye.